Good evening, everyone. I wanted to give a good perspective on dollar INR on this beautiful Friday evening, TGIF. Thank God it's Friday. So I want to show you two charts today. Okay, the first is the dollar INR daily chart. This is the offshore chart. So this works 24 hours, slightly different from the onshore market. But what we have seen, one characteristic that we have seen, earlier the prices used to be very stable. I had already highlighted it before, and now the prices have become volatile, and we are increasingly seeing two-way volatility. See, we saw a swift gain towards 83, 84, and then we have seen a weakening, and now we are seeing rapid two-way movements. Okay, so the normal daily amplitude, the difference between high and low in dollar INR is around 28 to 30 paisa. So every day it is moving more or less on an average by about 30 paisa, and we are seeing directional moves, good movement on one side and a good counter reactive move on the other side. And we have Trump on the other side giving his tariff tantrums. So that is keeping the market on the toes, and there is increasing volatility in the dollar INR. So forecasting becomes very difficult, risk management becomes even more difficult. So in such a situation, what do you actually do to manage risk is a very big question. So I want to emphasize, I want to show you another chart, but I will want to emphasize here, that options as a hedging instrument is something that all of you should seriously consider. And I'll give you the logic why I'm saying it. I'll also give you a logic how it is even more attractive doing options now. Okay, I want to show you this chart as well. So what is this chart? You can see three lines here. These are USD INR options volatility. Okay, so it is 1 month, 2 month and 3 month, the three colors, blue, yellow and white, the three colors, the USD INR options volatility. So the higher the options vols, the more the option premium, the cost of options are higher. The lower the option vols volatility, so the cost of the options will be lower. Now what we have seen here in 2024, the options volatility had come down. We had seen in the dollar INR chart, that time the rupee was very static, hardly any volatility there, but then it went up substantially higher and touching around 6 to 7%. But now if you would have seen the latest trend, despite of volatility in USD INR, the options volatility have come down quite a bit, and it is around 4.5% now. And if you see the long term average, if you see from this side as well, if you see the long term average, the option vols has remained around 4 to 5%. So what does that mean? That means that if I want to buy a 1 month option, which is equivalent, the strike price is equivalent to the forward rate, at 4.5%, the option premium cost is around 49 paise. Okay, but at 6.5% volatility, which was just the volatility some time back, the option cost is around 69 paise. Okay, so now the option vols is around 18, 20 paisa cheaper for 1 month. Similarly, if you do a 2 month option at around 4.5%, the 2 month option premium comes to around 68 paise. Again, if you look at 6.5% option volatility, that is close to 90 paise. So option volatility is lower, which directly means that the USD INR option cost, vanilla option cost, is less. And since we have seen this kind of two-way movement, taking a 1 month option with a cost of 48 paisa looks very reasonable, since we are looking at large two-way volatility. So all of us have been using forwards to hedge. So I think now the markets in one way is telling us to evolve and use vanilla options as an additional hedging instrument. Okay, so that's it from my side. Have a great weekend.